Hello and welcome to Policy Watch, a snapshot of the biggest business stories, their context, their relevance and impact. I'm Ishan and there's been a lot of action this week in the case of the massive default of Vijay Mallya, who owes 9,000 crore rupees to scheduled banks. Mallya's case is not an isolated one. Bad loans of public sector banks are set to exceed 4 lakh crores this financial year. The government has assured that no willful defaulter will be spared, with suits and FIRs filed in nearly 90% of these cases. Banks too have initiated action in many of them. To put this entire issue into perspective, today I'm joined by Shubhamoy Bhattacharjee, consulting editor at The Business Standard, and eminent economist Mohan Guruswamy joins us in the studio as well. Thank you very much, both of you, for coming in. Mohan, I'll start with you. Just put it into context for us. How big is this problem? Because let's talk about Vijay Mallya first. The idea of a willful defaulter, that he siphoned off money and he should be brought back. It's become a political blame game. But getting into the business aspect of it, was it just bad business or was there more malaise to the entire event?
Look at it in the context of things. Mallya is only 1% of the declared NPAs of the public sector banks. Okay, but I can't see any. What is willful default? You get into a business situation where you make losses. The person who gives credit against dubious collateral, he is also party to this. You know, a man whose company is sinking will want to borrow at whatever cost. And he's been running that airline for 5 or 6 years. He's been settling debts, paying for fuel, paying for employees, you know, all those years, and he's making losses. And you're still giving him more money. There's no business model. But you lent him money. You lent him money on dubious things like, you know, brand name. With the brand name would belong to the beer, but he tagged on airline and said Kingfisher Airline has a brand name, and airline which is making loss has a brand name which is valuable. So these are all dubious ways of lending money, which is endemic in the Indian banking sector. Because all this money is given behest of politicians, behest of bureaucrats. There's a lot of pressure which is applied to get this money. Money changes hands. So, you know, you give bad loans. And bad loans, you know, is chronic now. Because nobody of all these guys who are the top 6 companies, houses in India who are supposed to be stressed right now, nobody is being taken up for a restructure.
Right.
Restructure in India means give more money. That's what these guys mean. And they're going to give them more money. Because we are invested in the system. Nobody wants to take hard decisions. Restructure means you force somebody to sell some divisions, you force them to hand over management, to do all kinds of things. You don't do that. You just keep lending more money. As a result, you piled up. Some of the debts are so huge and big that, you know, it will bring the whole house of cards down. And you got yourself into a desperate situation. Mallya is only a small part of this. 4,000 crores is what he's borrowed. The rest is interest and interest on interest, and, you know, and you can keep now jacking it up till kingdom come. But before he left, you could have asked him for a one-time settlement. You know, you take a haircut on it, and you would have recovered 3,000 crores or 4,000 crores or whatever. Because he's got those assets in India and abroad. You could have attached them or done something. You didn't talk at all, and you just kept giving more money. Even till last year, he got money.
All right, Shubhamoy, so I mean, we've talked about this, that the NPAs are a big worry and not being addressed on a war footing as they should have. And this is really, Vijay Mallya, as Mohan was saying, is just one of the minor players in this. The overall health of the banking sector is really worrisome.
Absolutely. And the problem, as usual, lies in the fact that we chase the wrong solutions. The problem with the banking sector is that it's government controlled. 70% of our banks in India is run by government. So which means anybody who can play the government system can get a loan. And we want that security. We want the banks to be safe as hard that it's government security. There should be no risk for them in terms of taking commercial decisions. Well, then the other side of it is that anybody like Vijay Mallya can walk in and can play the system. He became an MP, so he was a respected guy, and he could, just on that brand, Mohan Guruswamy was rightly talking about brand, he himself thought he is a brand, and he got the loan. And which bank official would be able to tell that I will not give a loan if that MP goes and tells the ministries that I want a loan? So it is essentially a systemic problem that we have created for ourselves, and it is going to get worse because he's the first one, but he's not going to be the last one.
Right.
And that is where the restructuring problem and everything comes along. That where does a government-run bank, its chairman, have the nerve to tell a company that, hey, I don't like the way you're running your company, you're running into regular losses, please turn around, change your
Could
model.
this problem have been addressed much, much earlier rather than right now when it's completely blown out of proportion?
Absolutely. That if you want to go, if the bank wants to go today, not just Mallya, to any company which is running into an NPA and wants to tell them that, look, I want you to restructure your balance sheet, I want you to take a haircut, I want you to hive off your non-core business. Do you think the chairman of any government-run public sector bank will be taken seriously by any of the companies? They'll simply walk across to the nearest political party which they have financed, because it's a government-run bank system. And if that is the case, then where is the chance that the 4 lakh crore will not become 8 lakh crore or 15 lakh crore?
All right. So, I mean, this proportion, this problem could be increasing really by the minute. But, Bonsa, you know, the point is that the government, and there is increasing pressure every day on the government to do something about this, to do more about this. But can the government really do much? Can the government interfere?
You can't do anything in the immediate. But there are some things you could do, you know. 3 years ago, 2 years ago, when the Bombay new airport terminal was opened, the Prime Minister went for it. And I wrote at that time, just look at with the photograph there, saying that look at the photograph here. You got the Prime Minister, the Finance Minister, the Home Minister, the Governor of Maharashtra, the Chief Minister of Maharashtra, the whole lot, the Chairman of State Bank, the Chairman of IDBI, everybody there. And that company was in bad debt to 28,000 crores then. So what signal are you giving the bankers? That he's got the Prime Minister in his bag, Dr. Manmohan Singh is standing there inaugurating the terminal. Doesn't Dr. Manmohan Singh knows the indebtedness of that company? Doesn't he do a due diligence before he goes to these things? You know, these questions have to be raised. And it happens again and again. You know, this Prime Minister will go, this Finance Minister will go, and this is the system. Now, but you can't do this in a sudden jerk. You got to take it step by step. You take individual groups, address their issues, say where they are overextended, make them sell assets, make them restructure their management. You know, these are things which you need to do. You have these asset management companies which are specialized in these things. You ask them to look at these companies, which are already stressed. You know, we had many years ago an exercise done on some of these companies, how to restructure them. But before anything could be done, you know, the politicians got into it and said it can't be done. So give them more money. And that's, so he was right. The problem is that the ownership of the banks by the government. So which means that joint secretaries and MPs and ministers of state all exercise control of banks' assets. So they distribute money. So I'm asking this question here on Mallya. You knew he was stressed, but you gave him loans. Didn't the joint secretary concerned in the Banking Services Ministry know about it? Didn't MPs realize that? Didn't the ministers realize this? Didn't the bankers realize it? Nobody red flagged it, and this continues. What is the RBI doing? The RBI chairman, governor now makes a few noises, but you know, he can red flag it. He can say that, you know, can't extend any more loans to these companies, and you got to restructure them, you got to de-stress them. But you know, we have to take them one by one and make examples of them. Now we've taken, the smallest fellow has taken off, tomorrow somebody else will take off. Right. But there are people who are still getting more money. You know, there was a famous case of one of the, friends of one of the top politicians in the country who got $2 billion from State Bank, you know, and there was no basis on which that money could have been advanced. But, you know, the announcement was made. Right. So I think you have to professionalize the management of banks. I would dismantle the banking services department, saying that, you know, you don't own the banks. Okay. The banks are autonomous. They're owned by the public. And, you know, all these banks, except State Bank maybe, you disinvest all those banks and give 51% of the shares to the general public. See that nobody concentrates. You have restrictions on the amount of shares a group or an individual can have, 3%, 4%, 5%, whatever. Disperse the ownership, professionalize. And there are a lot of professionally managed companies in India which do exceedingly well. So why can't banks function?
Yeah. So essentially, that's the point. That if it's going to be run, one part of it is going to be run by the government, then the government can't turn around and say, hey, somebody else is responsible. It is the government which is responsible.
Right, and the argument often given for government control is that you have to give loans to where the banks normally wouldn't, to the agriculture sector. But that hasn't happened.
I like that point, Ishan. where the loans where they shouldn't be given, and that's exactly the point. This is a place where they shouldn't have been given, and that's exactly where they end up giving, because it's obvious where the phone call is going to come. It's not going to come from a farmer saying I didn't get a loan,
Right.
but it's going to come from a money bag industrialist. And true enough, why wouldn't they play the system? If we have created such a system, then that system has got to take responsibility.
Right.
This is where the big problem comes along. It's repeatedly coming along. We had 6 public sector units. Most of the public sector units today which are not listed, out of the 243, 294, are about 70 odd are listed. They're the good companies. The rest of them don't even have a net worth. They are just sitting out there as shells. We have ended up investing and making a mess of them, government run. Ditto for the same with the public sector banks. Each of these 29 banks, as Mohan is rightly pointing out, of them, excepting the State Bank of India, today, I mean, it's a very scary situation.
Right.
That excepting State Bank of India and probably 2 or 3 more banks, the rest of the banks, frankly, have ceased to exist as banks. They are just simply, piles of non-performing assets. The net worth is so bad. CRISIL's report day before yesterday of starting to cut down their credit rating
Right.
is actually scary. It just shows what is happening, that the firms, those money will not come back, and the money will not come back because the economy is in such a bad shape.
All right, final word in the segment.
One point I'd like to make is that, sectors can be designated. Like, the RBI can designate that, 20% of advances will go to the farm sector, 5% will go to the housing sector, whatever, They have these norms already, and banks try to keep to those sectoral limits. So that is already there. But the point is that if you have political interference to give loans and you can't collect the money back, there's no recollection of farm loans at all.
Right.
All you have is evergreening. So, there was a new report the other day saying that there's no new fresh loans issue. They're all old loans. People who borrowed money get money again. People who haven't borrowed before don't get money. So as a result, you push the small farmer who's got very little collateral into the hands of the money lender or the microfinance guys who are as usurious as the money lenders, and you caught them in a debt trap. So I think you really got to take a composite view of it, a comprehensive view of it. It cannot be done by one government. It has to be done by the political system. They all have to sit together and say, how do we solve this? Because this is a crisis.
Yeah, blame game perhaps won't succeed anymore over here. Not Absolutely. A willful default, but perhaps a willful neglect has led us to this situation. On that note, we'll take a very quick break. On the other side, we'll be discussing an important bill that has been passed by Parliament, the real estate bill. How does that impact you and I? We'll talk about that on the other side. Welcome back. You're watching Policy Watch. Now, the Rajya Sabha passed the much-awaited real estate bill this week, seeking to regulate the property sector, bring in transparency and help protect consumer interests. Among the big features of this bill, all projects to be registered with regulatory authorities, all project details and clearances to be shared with buyers, and a state regulatory body to ensure timely completion and handover. For a better understanding of the bill and the long-term implications of the sector, I have with me Shubhavaya Bhattacharjee, consulting editor of the Business Standard, and eminent economist Mohan Guruswamy. Mohan, I'll start with you. What do you make of this real estate bill? A good step in the right direction as far as protecting the consumer interests are concerned?
It's a very good step. It is long overdue. I'm glad Parliament's found the good sense to unanimously get it going and make it law. And I think, it can be finessed, it can be improved, but this is a good first step to take. Because today, as things stood, consumers had no right at all. You're a buyer, you have no rights. All building projects are late. It's become endemic. You can't get a project where things are going to be completed on. Very few. Even the big business houses who rented this are late in delivery because they use the buyer's money for other things, and sometimes, permissions are also slow in coming by, and, nobody takes responsibility. As well, if you have your money, you lose interest for 2 years, nobody is responsible for that. You suffer the loss. I think this is, but I think I'd also like to see a bill added that, realtors have to have qualifications, constructors have to have qualifications, certain amount of work before they can take on.
Yeah, we're not talking about the kind of projects that are being created or the building quality, perhaps. I mean, the bill
so these things, now every second guy is a real estate broker. Every thug in Gurgaon is a real estate broker. Because if you don't do anything else, become a real estate broker. So you have to have, reality is a specialized subject. You have to have exams to qualify people. And all over the world, you have qualifications. That before you can hang a shingle outside your wall. Here,
We also have our type of qualification.
This is anybody who has the land or the money.
Yeah.
But Shubhamoy, as far as the real estate sector was concerned, Mohan Guruswamy himself had pointed out to me a couple of shows ago that black money was being siphoned and pumped into this sector in a big way. Does that take care of that particular aspect? Does this particular bill?
Yeah, it keeps the space. Let me put it in the perspective. The operational issues of how you check black money coming into the sector, of how you ensure that the construction quality is of a particular size, or provisions in the bill which says 70% of the project cost should be put in escrow account by the developer. These are things which the regulator, each state will be setting up a regulator. The regulators have to then form rules accordingly. For instance, you would already see there are reports, for instance, in Business Standard, there was this report that many of the developers are already pressing many of the states that, when you set up a regulator, please ensure that my existing project doesn't come under this.
Okay.
My future project comes under this. So there is the gaming which these guys can play. Now it's up to the regulators there and the states, individual states, because this is an enabling bill. Each state now has to take this bill, form its own rules, set up a regulator, and then deliver justice. So there's still some way to act upon. The central government has opened the way. But what happens in Delhi, forgetting Delhi, Delhi is still central government control, but what happens in the different states will have to be done by the states by setting up their own individual machineries. And the trick will be to see and to keep oversight, and programs like these are therefore very essential to ensure that states don't play games in, letting vested interests get away. That will ensure that the black money doesn't stay stashed in corners from where they can't be priced open.
All right. Both the black money issue, is it really the biggest malaise of the sector? I mean, as far as the real estate sector, it's been in a slump for some time now. Does this revive the sector, or does this create more hassles, more license Raj?
This doesn't revive the sector. What is the problem of the sector is there's an oversupply. And there's no new demand coming for housing because housing loans have tightened up. Housing interest rates are too high. And the middle class is scared of making any large investments, at this moment. So you got to get confidence up, and the confidence comes when you think that prices are escalating. You buy today, it'll be worth more tomorrow. So today there's no confidence of that happening. So this will not address that issue. It will not address the issue of black money either, because black money is a source of money generated by people who don't want to declare that income or cannot declare that income.
Right.
So that money is going to be sloshing around. That you can't address. But I think there's something which you can address. Why do people want to under-declare valuations of house? Because stamp duties are very high, 17%, 18%, sometimes some states have 20%. I think you've got to get some rationality in there to reduce the stamp duty, to get a linkage between circle rates and the actual rates prevalent. Everybody knows what the market rates are in the place. So you link the circle rates with that and say, okay, stamp duties are going to be lower, but the circle rates are going to be higher, or whatever. You solve this mismatch so that the incentive to pay in cash to avoid the 10% or 15% you would have to pay for as registration would not be there. That's a lot of money, 10, 15% if you can save on half your...
Yeah, for an ordinary consumer it is. And in terms of consumer protection, I think that is where the spirit of the bill, if I may call it that, Shubhamoy, that is what it encapsulates, protecting the consumer.
Yeah, and a major part of that bill is also about tenancy. Tenancy issues in India are frankly in a very bad shape. And more people will be staying in tenanted occupation. And they absolutely, even the landlords, as well as the rules, what guides the tenancy, is in pretty much shambles across states. This bill is one step in that direction to ensure that we can put some order. If we are going to say that we are going to have housing by, say, 2022, 23, that's what is being talked about, then we got to ensure that the tenancy issues are settled down. So there are lots of good from this bill, which ensures, basically it ensures that there's a regulator, that now a regulator can be set up, and the regulator can, with the authority of a bill behind him, law behind him, go and act as a policeman between the buyer and the seller.
All right, so it's not the wild, wild west anymore of real estate.
Yeah, but there's still two issues out here. One is, I think, rent control is outdated.
Right.
To have rent control properties is wrong, and I think rent control should go. The second thing is that, you have to penalize people who don't deliver. I think that those provisions have to be tightened up a bit. The third thing is government itself is the biggest defaulter. Government never vacates buildings it owns. Government companies don't vacate. Government itself doesn't vacate. So they are sitting on. So government should be given instructions that you will, when your lease is over, if the landlord wants the place back, give it back. Don't contest it. This has become a subject of CBI inquiries now. A bank gives up its premises, saying that the landlord wants it back. You say, why did you give it back? There must have been some underhandling. Investigate that. You got to say that we will adhere to commitments made, and a lease is a commitment. So government should first set an example before it insists others do that.
All right, so a step in the right direction. Final word to you, Shubhamoy, as far as the real estate bill is concerned. The sector we know is not going to, as Mohan Guruswamy also pointed out, not going to get a big rise out of this particular bill in terms of the slump that it's in, but a step in the right direction, so to say.
Yeah, possibly some tangential effect if people feel confident that they, they can put their money now. There is a statutory authority. There would be some flip side. There would be some demand. So yes, you can expect a little bit of help coming out there. That's a very major thing. Plus, it ensures that we get out irrevocably from the area of darkness, which was what the real estate sector had become.
Yeah, not the wild, wild west anymore. Thank you very much, both of you, for coming in. Mohan Guruswamy, Shubhamoy Bhattacharjee. It was a pleasure having you in Policy Watch. That's it on this edition of Policy Watch. We'll be back next week to discuss the big business news stories. Thanks so much for watching for now.